Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I'm going to take you through how we account for various types of investment in the consolidated financial statement, i.e. group accounts. So let's see these investments and how they are accounted for. So I take the first one. Entity A purchased 100,000 of the $151 ordinary shares of entity B. What we do is to find the percentage of interest, and this will be 100,000 over 150,000. So let's check 100 on 150. That is 66.6. So let's run it up to 67%. And 67% is more than 50% interest. And what it means is that entity A controls entity B. Therefore, entity A is parent, entity B is subsidiary. So in the consolidated account, so in P&L, entity A, so the parent consolidates the accounts of B, i.e. revenue, cost of sales, admin, or the other operating expenses, all of which will be consolidated. And in the financial position, again, the parent would consolidate the financial position of B. So a subsidiary, there is control, entity B is consolidated. Now let's see the second investment. Entity A purchased 30,000 of the 120,000 ordinary shares of entity C. Percentage of interest is 30 on 120. Let's see, 30 on 120. This is 25%. Now, for 25% is less than 50%. So what we say is that entity A has significant influence over entity C. Therefore, entity A is an investor. So you can call entity C an associate of this investor. Now, what happens in the financial statement is that entity A will use equity method to account for entity C. So in the P&L, entity A will show the share of profit or loss from associate, in this case entity C. In the financial position statement, entity A would account for investment in associate. This investment in associate, we calculate it as follows. So we start with the cost of investment, how much entity A paid for the shares, add or less share of profit or loss of associate. So we add or less. If there is impairment, so if there is any impairment on the investment of the associate, all the investment loss will be deducted from the investment in associate. And if the associate pays dividend, the dividend will also be deducted. So dividend received will also be deducted. Now note that the dividend will be paid from profit. So if we do not deduct the dividend, that will be double accounting. So we deduct that, and the net figure will give us the investment in associates. Additionally, note that if there is an impairment of the investment in associate, that investment is also deducted in the P&L. So deduct from profit, deduct from profit of associate. If it's a loss, you add. So here I'm looking at impairment of associate. So you add to loss of associate in this order. Good. Now to add a third type of investment, let's say that entity A again purchased 10,000 shares of the $120,000 ordinary shares of entity B. Again, we need to establish the percentage of interest, and this should be 10 over 120. So 10 over 120, that should give us 8.3. So let's say this is 8%. Now 8% is less than 20%. So it means that the investment is a financial asset. Or is equity investment. It is not associate, it is not subsidiary. Now, accounting for it in the P&L, the entity one would give a dividend received as investment income. So it will be investment income in the consolidated P&L. Now, depending on the valuation basis adopted as per the IFRS 9 financial instruments, if fair value through P&L is adopted, it means that fair value changes is reported in P&L. So at the end of the accounting year, the investment is fair valued. The changes, be it a gain or loss, goes to P&L. But if the entity uses fair value through OCI, the fair value changes is reported in OCI. And then finally, note that in the financial position, in the financial position statement, the entity would have equity investment at fair value. And depending on the valuation base, like we have said, it goes to P&L or OCI. So the investment will be remeasured at fair value at the end of the year. And this will represent the value of the financial instrument or the financial asset. So this is how we account for the various types of investment which you are likely to meet in the exam. I hope this helps in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.